All right, so in this section, I'll be talking about different ways of using liquidity as a way to create a very mechanical trading system. This is mainly for those that are very interested in trying to create their strategy and system where it's very mechanical. It's more like step one, two, three, and then execute the trade rather than people that are trading more discretionary like me, where I'm using my experience to trade profitably. You can trade profitably using both mechanical and discretion, honestly as long as you know and understand how to reprice, you're completely fine with either way. But in this section, I'll just be talking about session-based liquidity, okay? Later on, I'll be talking about time-based liquidity, but for now, we'll just focus on session-based liquidity. As you guys know, I already told you guys the exact kill zone session timing, so you guys can use the kill zone session timing for this liquidity sweep that I'm going to go over with you guys. So these are my settings for my indicator that I made right here. Okay, show session names on, border width, all this stuff. You guys don't need this indicator if you don't want to use sessions. And I just have made this indicator so it helps me easier identify these things, as well as it also sends me an alert when my session ends and starts. So that's something I found very interesting. So I'm basically gonna be looking for the sessions. So in this instance, for example, let's take this price action here, for example. What you want to do for this is session-based liquidity. All it is the high and low of each session kill zone. So either you can either mark the entire session or a specific time frame. I personally use the kill zone as my session range. So for example, let's say New York session, right? This is New York session from 8:30 a.m. EST to 11:30 EST kill zone. I'll mark this high and mark this low. These are my session-based liquidity, right? So when this new session low gets taken out, I then look for a trade in the other direction. When the high gets taken out, I look for a trade in the other direction. Basically, looking for a reversal. So depending on which range price takes out first, that is where I'll be trading towards, essentially. So if it takes out the low, I trade towards the high. If it takes out the high, I trade towards the low. So this usually is used when you are looking for the previous session. So you always want to be looking for a previous session range. So for example, let's say you are a London session trader, meaning London session is here. So we create a vertical line right here. So you start trading here, right? What that means is essentially you're marking out Asia session low, which is right here, as well as Asia session high, which is up here as well, and you're looking for either of these points to be taken out. And if it gets taken out before your session, then liquidity has already been taken out before your session, and what you can do is already start looking for a trade going in the other direction, which in this case, you are looking for a trade to go long here. So when your session starts, you want to look for long entries. So for example, let's say we use this fair value gap here as an entry, or you can use an inverse fair value gap, all up to you, depending on what entry type you would want to use. That I taught you guys, they all work. However, I will say if you're looking for external liquidity, meaning swing highs, swing lows, you want to avoid using impulse entries most times because it's not as accurate. You would rather want to be using the other three, which is the OB, the fair value gap, or the inverse fair value gap entries as your entry confirmations instead, right? So, and then you essentially would find confirmation there and then target the opposing high of the session, previous session. You can either target the opposing session high or you can target just something else, right? Just target something either as the opposing origin or opposing flip or wherever you think price will likely reverse to. So, for example, in this situation, you could target this origin here. That'll be your target there for a 3.5 hour trade. You don't always have to target the opposing side of the session range, pre-session range. You can. That is just from my back testing. It works pretty well if you target the other side of the session. However, you will keep in mind you will have a lower win rate if you're holding all the way until that other opposing side of the session, right? Um, if you want a higher win rate, of course, you would just target like an origin, like how you would normally target a normal trade. This just keeps everything very mechanical. Personally, I've done a lot of back testing on this myself using session ranges, session range liquidity, and I just found that it doesn't change too much of the win rate for me personally. So it doesn't matter as much for me in terms of using it. I like to just trade more discretionary based on my experience. I just get more profits out of the market. But for people that have problems with things like over trading or many other things. I would highly recommend you guys use this because this will greatly increase your probabilities of just following your plan and learning to essentially trade and make some money without confusing yourself or over trading or revenge trading, right? Because in this situation, it's a very simple mechanical system. You're just waiting for the previous session range to get taken out, and then you look for a trade in opposing direction. So, for example, we could use London session, for example. Let's say you trade New York session. New York session opens 8:30 a.m. EST. We took out London session high, right? Previously. Okay, we took out London session high, and you can see we took out part of London session here again. So once London session high is taken out, we then want to be looking for an entry, okay, in the other direction. So we would be finding entry here. So we start trading here, and then let's say we take a, let's see, we have a OB entry here that taught you guys. So you guys can take an entry off here, and then you could essentially just target the opposing side of the other session, which is down here, or again, like I mentioned, target an origin. So which right here, I already see one right here. Boom, there's an origin right there, and you would target that. That would be target with 4R right there. And then depending on break-even system, you might have ended break-even here, or you held until TP for 4R. So that's another example. Another example here, you can take New York session low and high right here. And essentially, if you're trading Asia session, you would look for this, right? You'll look for New York session low or high to get taken out. New York session low got taken out first. So in Asia session here, in premium discount, remember premium discount of each leg, you will be looking for longs here. So for example, we took inverse fair value gap entry here. I already see it right here. Okay. And then we essentially can target the high of the previous session for 4.6 RR. This keeps everything extremely mechanical and just something to help people that are having problems with their psychology. Try this out. Let me know how it goes. But for me personally, I like to take more trades per day. So this is more like a 1 and 2 trades a day kind of system where essentially if both sides get wiped out, you can look for example, a trade in another session, other opposing side. So since New York session low got taken out, we look for New York session high to get ran. And then once New York session high gets taken out as a sweep of liquidity, we then look for a short. In this case, we are counter trend, right? Your counter high time frame trend. The high time frame external trend is bullish. So this would be a low probability trade that you know and you keep in mind. And you would most likely just take a break even here, honestly. You would just uh manage your trade here properly. I would have broke even most likely around here. Okay, this is a very strong break. This is a very nice internal break of structure. So you guys can mark that as well if you want internal break of structure, okay? It's also technically internal change of character, if you want to call it that. Be more specific, since this is the low that created a new high, and then we broke that low, changing bearish. You would have had a break even, or if you TP'd at this zone here, you would have a 2R-ish trade right there. So that's essentially how we are going to be using session sweeps for those that are interested in finding a system that's more mechanical for them. Okay. Um, Usually, again, you can expect 1 to 2 trades max per day because you are only going off the 2 POIs, which is the external liquidity I mentioned. Remember, I taught you guys we have internal liquidity, which is POIs like OBs and flips, and then we have external liquidity, which is swing points where there are stop losses. Essentially, swing points, these session ranges will have stop losses above them. For traders that are potentially maybe swing trading, they're looking for target something else and they get wiped out for the new true move. So then in here, we have 80 session high. And sometimes what happens is if a session, pre-session range does not just get taken out, what that most likely means is that session is creating a very tight range, and you can basically avoid bad market conditions using this because it would only take out the previous session high or low if there is good market conditions where price is giving you enough room to breathe. So in this case, 80 session high did not get taken out, but 80 session low right here got taken out previously. We then wait for London session to open. And of course, this needs context, right? You're not just taking a, for example, trade here, right? Okay, and long up here. You can, but this doesn't make sense to me, right? You'd rather take it down here where you have Aegis session here again. This is technically within Aegis session, just not within the kill zone. So this is something you guys can backtest if you want. Whether you want to take the whole entire kill zone, which the whole entire kill zone would be right here, right? This would be entire kill zone, and then, or not kill zone, the entire session, and then you take this low here, wait for this low to get taken out, and boom, that's your trade. This is Aegis session low right here. This already got taken out previously right here. or Asia kill zone got taken out previously, and then you could essentially look for a trade here. Now this already got taken out here, right? But you can still look for a trade later on here. Just make sure you are trading with context. Context is extremely important in trading. If you're not trading without context, it's kind of useless, right? This is why algos and things like that do not outperform pure price action. For us that trading pure price action, that understand how the market moves and we flow with the market, let the market tell us what to do, and we can anticipate price with high accuracy, we are able to outperform algorithms. Okay. So for example, right here, you would take an entry here off this OB. You guys already see this. Hopefully you guys do see this. This is also a sell to buy right here, fractally. Look how exact the market is. We tap exactly on the dot. I would have my stop loss right below here. And then you can target either, like I said, the previous session high or an origin, which is gonna give you a higher win rate, origin or flip. So either this right here, I would target something like this here, or you can target this here as well. Either one works. What you can also do for trades is if you really want to squeeze the most profit out of your trades, you could essentially have your TP set at the more extreme zone right here, the origin right here. This is a flip right here because this broke internal structure right here. This was internal break or internal change of character, if you want to call it that. That's right here, internal break. What you can do is you hold your trade, have your TP set at the extreme, and then you wait to see if there's any reaction. In this situation, this flip had no confirmation of going down, so therefore you can hold until the next zone, which is the origin. So in this case, you would have a nice 7-hour trade. So that's another example. If we want to take another example, we take this low here, London session. We took out the low. New York session opens. We want to be looking for longs right here. We don't really have, we have an inverse for value gap entry here. We don't really have any retracement back here in this situation, and you would have targeted the previous session high, London session right here, which would have given you a nice 5-hour trade. And you can also target other session highs as well, like previous sessions, but the farther out the sessions, like the older the sessions, the less likely it is because that means the price has to like move a lot more. There's a lot more room for price to move to get to that TP, right? Again, the farther your TP is from your entry, the less likely it'll hit. So that's just how nature of trading works. An Ace session high finally gets taken out here. So you can either look for London session high in your session, get taken out, or Ace session high. Again, previously this is a lot more I'll say accurate if like the since the London session low was taken out during the London session because this is the kill zone. Since the kill zone low was taken out during London session, technically it's not as probable to take a trade here in your session to go the other way than if it was never taken out in the first place and then it gets taken out like here, for example, in your session, where it takes out both London session high and Asia session high. And then what we do is we look for an entry. Oh, boom, look, we have a perfect OB entry right here. I don't usually use my indicators much anymore. I can spot these things, but indicator helps me draw these things a lot. It's not showing here because it's all mitigated right here, right? I have a setting here somewhere where it just shows mitigation, show only active zones, things like that. And I have a secondary zone. A lot of things in my indicators I made. But yeah, so essentially I would then target, for example, you could target London session low. Since the low is already taken out, you don't really have like a London session low to target. You could then just target some OB. I would have targeted this OB right here, this PUI, sort of 7R right there. Boom, perfect trade. And these trades, look, they don't last that long. This is an hour hold, right? Some people that enter off the 5-minute chart, they could hold for like for example, since price is fractal, right? A 1-minute trade that lasts about 20 minutes for a person on the 5-minute that's entering that same market condition and setup would take them 20 times 5, so 100 minutes. So that's essentially the gist of this. So if you want, you just create rules in your system on how you want to be trading these session sweeps. So whether you want to have a rule where you want to trade the whole entire London session, which is 2 o'clock right here, to whenever New York session opens. So you could either trade this entire low or high of the session, or you could trade the kill zone high and low. I use the kill zone high and low. Personally, it's just easier for me to see. But you can use entire session as well. You just have to backtest, and as long as the data is proven profitable, you have an edge in the market and you're profitable. Just keep executing, focus on your rules and psychology, and just essentially at the end of the day is just staying disciplined, right? To follow your training system. So whatever it is, you make it work. So this is something you guys can definitely implement into your system for those that have discipline problems or are not quite yet understanding market structure to the point where you don't quite understand where to target, things like that, right? And the more experience you have with things like this, reading the market, more screen time, proper screen time, which is quality screen time, understanding what you're actually looking for, then the better you get at trading and the higher your win rate becomes. As well as your RR, because you start learning about weak highs, which ones are truly strong lows, and understanding, anticipating where the draw and liquidity of the market is trying to go, you can then maximize your winners a lot more. Again, I personally don't take partials. I know some traders take partials, but I don't because I have a lot of confidence in my trading system of where I put my TPs. And 99% of times, my TPs, if it's a winning trade, they will hit my TP rather than reversing maybe midway and then hitting stop loss. So again, that's just from confidence built from Marcus screen time. Again, the more screen time and data you have, the more confident you will naturally be with your TPs. So people that are starting with holding the trades, I would say it just comes from experience, and the more experience and confidence and data you build, the better. That's why I highly recommend you guys to journal as well, because that will help you look back on your data and understand as long as you follow your plan, you will be profitable. Okay, so for example, we got using New York session high. In this case, you can see Ada session, it didn't take out New York session high or low at all. New York session kill zone here was already taken out earlier, so you can see this is not the best market condition right here. It is very, very not giving big moves, right? But again, this Asia session, so you can't expect too much, but it's not giving the best moves. And you can see, for example, if you use Asia session high, it got taken out already, so you don't really have an exact untapped external liquidity point, so you would just mark the low. So I'm just giving you guys different variations of using these session ranges as liquidity. Let's see if I find another example. So for example, if your rule in your system is if the session range, if the kill zone high or low is already taken out, you don't take a trade in that direction. So the high was already taken out in your session. You are not looking for shorts. You would only look for long, especially if this low gets taken out. And when price trends a lot like this, when price really wants to trend, it will trend and sometimes react off inducement instead of the origin. So it may not always come back like this. It would most sometimes do things like this and continue higher because it wants to push and expand, right? And these moves are definitely a lot more risky to take, I'd say, because of how fast price is expanding. And you don't get the best price point. So let's say, for example, we could take more examples here. A session high, if you're trading your London session high did not get tapped. A session low got taken out. And then you could maybe look for a POI somewhere here to take your trade. If you line session ranges with certain POIs, that makes sense. You will have also a higher win rate. So, for example, London session highs here got taken out. I think we did this example here. But for example, if you're only a New York session trader, you would only really be looking for London session ranges, not Asia session. Because most times Asia session will either be too far away in terms of price, unfortunately, or it would already been taken out by a London session. As you guys can see, these sessions like taking out each other's highs and lows, and these are just critical points in the market, just based on time. This is just purely based on time, not price, but just purely based on time. So a session low gets taken out. You can look for opposing trade. You're not going to win every single trade, obviously. London session low here, it previously already got taken out. High also did not get taken out, but price did not come back for it. So you guys can see when price does not take out during the session, the previous session, it tends to range a lot more like this during your session like this. You can see, for example, here, this is a pretty good example here of something that's untapped. This is external liquidity here from Asia session range, kill zone, that was not taken out yet. So London session perfectly took it out during London session kill zone, which is perfect. We like something like this. We prefer something like this rather than a low that's already gets taken out. So for example, London session low, it already got taken out during London session. So there's not much like QOI preciseness, if you want to call it that you can really trade off. You would have to find another POI like something here. So A session low gets taken out. You can mark this as I don't trade session ranges again. I don't trade mechanical as much anymore like this, but you can mark it out as whatever you want to label it session low. Once it gets taken out, you then look for a trade in opposing direction. Okay. And in this case, you might have gotten stopped out. I'm not sure. It depends on your broker. And then you can either TP at the opposing side of each session or TP somewhere realistic, which would be, this will be here. So 5R. And you would repeat this process. Learn session low gets taken out, but this is not as valid because New York session didn't open yet for you before it gets taken out. But this high, you can say it made equal highs here, kind of got taken out. Once the learn session high gets taken out, as well as Asia session goes on here, that gets taken out. You even marked one entire Asia session high right here, and you essentially look for a trade in the opposing direction. So if you enter on this fair value gap, or you can find some inverse fair value gap, target opposing low of London session, which already got taken out. But if it already gets taken out, then you just want to look for a realistic target based on price. So that's essentially how we typically try to trade using session ranges. For those that want to use time-based liquidity, this is more like session-based liquidity. That's about it basically for this section. Just real quick, you guys can practice this. Feel free to for those that want something that's more mechanical. I'm basically just going over examples. So let's say one more thing also. If you don't want to use the kill zones, you can also just expand this real quick. I'm gonna reset this later. But wait, if I reset settings, I think this should be good. Yeah, I think the code is good. Okay, let's say you just want to use entire session. So a session, it opens at 8. Okay, PM for me, or 9 PM. I changed it recently because I was looking at the volume bars and stuff, and yeah, the volume it starts at 9. So 9 to 12, so 3 hour. Typically, it's a 3 hour session with Killzone, and then you want to have it so it goes until London open. And in London, you want to have it session, the whole entire session till New York open. So, for example, in this situation, now that we have the entire session highlighted, not just the kill zone, you would, for example, Asia session low, got taken out, right? You then look for a trade in opposing direction. Got a nice trade here. TP'd 6R. That's a really good trade right there. Asia session high. Never got taken out during London session. You avoid it. London session right here. High gets taken out. Then you look for opposing direction. We reviewed over this one. And then London session low here. Never gets taken out by New York session. So no trade there for you. And then if we use this as well, we can expand New York session later as well. But you guys know I don't really trade London session anymore. So for me, I'm mainly focused. If I were to trade this, I would mainly focus on the pre-session, which would be for me London session range high and low, as well as New York session range high and low for Asia session, right? So for example, in this situation, it will be more clear actually if you highlight the entire session as a range, it'll be more clear for your liquidity because it wouldn't be taken within the high and low would not be taken out basically within that session from the kill zone, if that makes any sense. So for example, London session lows right here. The high is right here. New York opens. Okay, we got swept unfortunately. This is a sweep right there because of the wick closure. And then price essentially, if you had another re-entry, price took out London session low. And once the price takes out London session low, look for another trade in the opposing direction and you find a realistic TP or TP at, well, since the high was already taken from London session, you wouldn't target the high again. Okay, so if both sides get taken out, you wouldn't target the high of the previous session again or low of the previous session again. I find this a lot more probably accurate, honestly, if you were to uh use the whole entire session, just because you might get confused if you're just highlighting the kill zone. So that is one thing. For example, Asia session high right here gets taken out perfectly right there. If you're just highlighting the kill zone, it would have been 12. Your highs and lows will basically be different, right? Before this, if you highlight the entire session as the range, then you have an easier way of taking out highs and lows that haven't been taken out because they won't get taken out until next session. If that makes any sense. So right now we won't have face that problem anymore. Essentially take out this high and look how perfectly price reacts. Inverse for value gap entry right here if you want to. And then you can target either a session low or you target somewhere realistic, like an OB. A session low is still intact, so never got taken out. We can draw this. Has never got taken out, and no trade here essentially, right? Because nothing has really gotten taken out. And then London session, look what happens here. In London session lows here, actually. Gets perfectly taken out, and look what happens. You probably got a loss right here. Another trade here with off the OB entry strategy, and then boom, you got a 5R trade. And then London session high got maintained and did not get taken out. If you repeat this process, I didn't drag New York session all the way, so I won't use New York session. A session low, it's taken out. London session, target 5R. I will probably do a backtesting video for those that are interested in trading this way in the course, and it should be pretty useful. So we'll see what happens for that. But I'm just going over basics so you guys understand fully how session-based liquidity works, right? So for example, London session high here. Oh, London session high. It's taken out by New York session, and you look for the opposing direction to take out the low or to be somewhere realistic. Again, you never want to, if it takes out the high, you're not supposed to continue trading long here. You're looking for a trade in opposing directions. That's the most extremely important part, right? You don't want to be looking for continuations in premium if you're longing. And then let's say when it's trending like this, you can't really do much, right? If it takes out the high and you obviously if you trade the opposing direction, you're gonna most likely hit a stop loss. So when the price is trending really heavily based on context, you would want to avoid taking these session sweeps. These session sweeps are more for if price is more ranging, right? But again, you won't know this until later, so it's not no point. You rather might as well just take every trade you see because it's part of your setup and part of your data. Trading session low gets taken out. Look for opposing trade, whatever. I don't know what stop loss you want to use, and you can target something realistic. In session high, you can keep if you want. If you want later, take out, which later gets taken out during Asia session actually, which is quite funny. London session high gets taken out here, and then we look for a trade in opposing direction. And because seasonalities also change, quarter one, quarter two, quarter three, quarter four, these quarters of the year, price for different assets may move slightly different, and they will have different volatility. I remember when I was trading gold, I think it was last summer in August, price was moving a lot more different than what it is now in terms of how it was moving. In the summer is actually extremely easy. Now it's moving a little bit harder, a little bit different because back then in the summer, what it would do is it would create a huge it would basically do like a 3 pattern reversal almost every single day. But now it doesn't create those huge range reversals as much anymore. It's creating more structure like many other assets. So trades a little bit differently. That's why you may not always find price going to the opposing previous session low or high, right? So I would highly recommend if you were trading this to just keep your TPs at something realistic that makes sense based on price. But for the session, for time, in terms of time, you take the time-based liquidity. So let's see if we can find an example here. In session low, you guys is taken out, and then you would PL now, you would have managed a trade here, maybe break even. London session high and low did not get taken out during kill zone. Asia session low gets taken out. The high does not get taken out until New York session, and then you would have had a entry here. Again, if the low or high of the previous session gets taken out and you get a stop loss, for example, here you take a stop loss. These wicks, I guess. Take a stop loss, you can still take a trade in an opposing direction with context, right? Context is we still have something unmitigated over here, still something unmitigated right here that I see. We did like a sweep here, okay? With context, you can still take a trade. You just don't want to blindly take trades. You still want confirmation 100%. Definitely not limit orders, okay? You should definitely not be setting limit orders for external liquidity. That's only for internal liquidity like PYs, flips, origins, things like that. Because those are where price has exact moments. When price takes out External liquidity, you don't know how much farther it will move until it creates a reversal. That's why it's important to look for these confirmations and also not for impulse entry. Another thing about the impulse model is I think people are trading it wrong sometimes is I really only use impulse model if structure uh is internally on my side. So if we already create internal structure that is pro trend that is trending, then I would take impulse entries as well as also if you have huge structure, huge ranges, I also don't take impulse entries there as well because price is likely to create a lot more structure in between these ranges because we're on the 1 minute time frame. So those are things that are kind of harder to explain. That's just from experience. But yeah. And then also as well as limit orders, right? If we were trending heavily on the 1 minute, okay, internal and external structure on our side, I would be setting limit orders here potentially instead of looking for confirmation because a lot of times after confirmation you get a really big stop loss or price never does a retracement to an OB or fair value gap. So setting limit orders is completely fine and ideal, honestly, for those situations. So based on market conditions and how the structure and everything looks, will depend on what entry model I use. That's why you guys see me use different entry models in different situations because there are times where I can anticipate where price based on experience will not come back to an OB, so I use an inverse fair value gap entry, or times where price I know most likely will just impulse out because it had an impulse delivery. So the redelivery mostly will be impulse, therefore I will miss a trade if I'm waiting for a retracement. So those are just some small little things that I just want to talk about again. Highs, lows getting taken out. That's essentially about it for this section, session-based liquidity, right? Not too much else to it. I would recommend, like I said in this video, to take out the whole entire session, use the whole entire session because I know kill zones actually would confuse people because kill zone highs and lows could get taken out within that session. Then you get confused on what to do. So just use the whole entire session for your session based liquidity, the entire session high and low, mainly focusing on the previous session high or low, right? So again, these timings are all based on time zones. So you want to convert it to your time zone that you are in. And for me, I'm in EST, so yeah. Again, this indicator also is for sale on my website. If you guys are interested in using this strategy, this basically essentially helps you mark out the session highs and lows pretty clearly because you can clearly see it based on the box and it sends you alert and things like that. So you guys would just, for example, if you were training this strategy mechanically, what you can do is just set highs and lows, and then what you do is right click and then add alert on Ray. You add alert here, and then you essentially just chill. I mean, you don't need to look at the chart in this situation if you're trading this mechanical system. You just wait until your alert goes off, and then you take a trade with the confirmation in the opposing direction. So, and thanks for watching. This is just based on session-based liquidity.